Welcome to today's CPE Study Circle meeting on Income Tax TDS Issues and Compliances. The session will be handled by CAD Santosh sir. May I now request Santosh to occupy the dais. As a mark of respect to our mother institute, let us rise for a CMO. Thank you, members. The speaker for today, CAD Santosh, is an associate member of the institute holding certificate of practice. He is one of the founder partner in Mrs. D. Santosh & Co. Chartered Accountants, and he is primarily focuses on direct tax laws practice in India. He has a rich experience in setting up processes, procedures, and entailing automation, auditing, and recommending financial controls, statutory audits, income leakage audits, and tax audits. He is also a speaker of Koturpuram Alayar CPE Study Circle of SARC of ICI. He has handled businesses finance module of the management training program conducted by Wipro. Prior to his practice, he worked with Wipro Technologies India in indirect tax controllership department. His responsibilities in the role include overall compliance and advisory of service tax for Wipro Technologies and their associated enterprises. He was also additionally responsible for enhancing, maintaining, and further automating the deal pricing tool DPS to reduce manual intervention and errors in the dealing pricing process. He has also handled the analytics of the order to cash department, which involved analyzing the pricing, SOW compliance, and order booking data to forecast and report key financial indicators to the board and the CXO team. With this prelude, I welcome the speaker to handle the session. Over to Santosh.
Thank you so much, sir, for the brief introduction. Good evening, members. So today's session is going to be income tax, TDS, issues and complaints. So I have categorized the presentation into two modules, where the first module will be the practical issues and practical compliances, which is already known, just a revision of it. And then the second part will have the issues and complications in the section, the amendments and the circulars that were issued. That can be taken up in the second part. Okay. Now first coming to TDS. TDS starts with applicability. Applicability, since it has lots of issues, we can take up in the issues part. Once if TDS is applicable, the deduction, when is TDS deductible, is the major question that comes into play. Usually, what is the time or what is the point in which TDS is deductible? Is there a single answer or is there a varied answer? Can we have an interactive session wherein I may come up with some questions, you have some questions, you can interrupt me, you can ask the question so that we can have a positive session. So, is there a way or is there a point in time when TDS is deductible? Any answers?
You record in books.
Huh?
The moment you record the transaction in the books.
Okay, when the transaction is recorded in the books, then you are saying TDS is deductible. Any other answer? When is TDS deductible?
subject to the limitation on the overall transaction.
Okay. Yeah, the limitation on the monetary limit that are being specified, it will become applicable. But once that limit has crossed, when is the point in which TDS is deductible? Either there are, yeah, please go ahead.
Payment or credit, whichever is earlier.
Is payment of credit whichever is earlier the common rule for all the TDS transactions?
When a person is liable to pay some amount to another party, then TDS adds a section.
Correct. That is the point of TDS. But whether it is at the point of payment or whether is it at the point of credit in the ledger of the book in the books of accounts, or is it earlier of the two, or is there something else?
Whichever is earlier.
Okay. There are the majority of the sections fall under the category sir has mentioned. It is at the time of credit in the books of accounts or payment, whichever is earlier. But there are certain sections which will be applicable only in the time of payment. I have just briefly enlisted the same here. So TDS here is deductible at the time of payment or credit, whichever is earlier, in the first column. At the time of only the payment in the second column. So to have a brief idea, 192 is salary, 192A is PF, 194B is winnings from lottery, crossword puzzles, 194BB is horse race. So all these cases are applicable at the time of payment, not at the time of credit. So first point. Now once TDS is deducted, what is the major time limit that is being specified for payment to the credit of the government?
7th of
Yes.
7th of next
7
month.
days from end of the month.
7 days from the end of the month. Right. 7 days from the end of the month is the common rule, or is there an exception?
For March there is 1 month exception. March.
What?
March.
1 month?
March month we have to pay before April.
Before the end of April.
Yeah.
So this is the that is how it is being, the framework has been put up. So usually TDS is deductible, TDS needs to be paid to the credit of the government on 7th of the succeeding month. It is an allowance of 30 days is given for the month of March. The payment shall be made through challan number 281. Now coming to, is it okay if I make the payment alone and stop, or is there anything else that I am supposed to do?
Return.
File the return. Why are we filing the return?
To generate the TDS certificate.
To generate the TDS certificate. That is one point. For the government, what are they looking out of the TDS return?
Matching the
Matching with the PAN.
deductee.
Matching with the PAN. So we will cumulate all the TDS that is collected, and based on the major head, minor head, and the type of payment and the assessment year or the quarter, we make the payment. In the same amount, there can be multiple PAN numbers that are associated for one challan. So that needs to be bifurcated, and credit needs to go to those particular people. So that is why we need to file our returns. The return due dates. What are the return due dates? When is TDS return filed on a monthly basis or a quarterly basis? Quarterly basis. For companies, individuals, everybody quarterly basis? Yes, it is quarterly basis for everybody. For the first quarter, the due date is the month succeeding the month of the last date of the previous quarter. So which shall be for the month April to June. The last date of the quarter is 30th June. So the end of the month succeeding the month of the last date of the quarter is 31st July. So this is applicable for the first, second, and the third quarter. The fourth quarter, there is a leeway that is being given, wherein 2 months period have been given. It's not 30th of April. Since payment has been allowed till 30th of April, the return can be filed till 31st of May. There are multiple form numbers that are available. For salaries, it's 24Q. For payments other than salaries, it's 26Q. And for non-residents, it's 27Q. Coming to TDS certificates, there are totally, apart from 16B and 16C, which will come a little later, there are two main forms or main certificates that are supposed to be given by the deductor to the deductee. Why do we need this certificate? Yes, madam. To file their individual returns. To notify the deductee what is the amount deducted, what is the total income that we have taken into consideration. For that purpose, we are creating this certificate. So this certificate is generated from the Traces website. Once we upload the return, immediately once the processing is done, the form will be or certificate will be available, which can be downloaded. And if we wish to affix our digital signature in it, there will be a tick mark in the certificate that is getting generated. If we do not affix our digital signature, then there will be an X mark or a cross mark or a question mark that will be popping up in the certificate. So this is the usual provisions. For all these transactions, a person needs to have his TAN number. Is there a case in which there is no need for TAN number for deduction of TDS? Yes. Property. Exactly. So the next case that we are seeing is 194IA. I am specifically taking this section out because this is an one-off case. Any person paying a resident payee, here non-residents will not apply, resident payee, any sum by way of consideration for transfer of immovable property. In immovable property definition, they have specifically again excluded other than agricultural land. In the section also, they have again excluded other than agricultural land. At the time of credit or payment, whichever is earlier. Here it is credit or payment, whichever is earlier. Deduct TDS at 1%. This section is applicable only when the total amount exceeds 50 lakh rupees. For this purpose, there is no specific requirement of getting TAN. TAN is sufficient, and the process of filing your TDS return is also a little different. So the due date for payment, it is the same as the due date for payment is the same, 30th of April in the case of March and 7th of the succeeding month in all other cases. Here there is no specific return form. There is a challan cum statement that is being filed in form 26 QB, and the TDS certificate will be issued in form number 16B. It shall be issued within 15 days from the date of furnishing of challan cum statement in form 26 QB, 15 days from the date of furnishing the form. The earlier certificates are to be given in a different timeline. Here it is 15 days from the date of submitting. If the payee is a non-resident, is TDS deductible? In the earlier case, if the payee is a non-resident,
Yes.
whether it is deductible, even if the amount is say 10 lakh rupees. Is there a monetary limit?
Falls under 195. It's taxable in India.
Yes, but whether is there a taxable, the property value in 194IA, it talks about 50 lakhs value.
50 lakhs is applicable only for residents.
194IA. So 195 from rupee 1 we will have to start deducting tax. It will be deducted at a higher slab rate of 20.8%. And again, the important point here is the benefit given for transfer for consideration, transfers with consideration not exceeding 50 lakhs shall not be applicable, and from rupee 1 we will have to start deducting. Is there a possibility for the non-resident?
Is it on the sale price or you arrive at the profit in the case of capital gain for NRI?
Under section 195. 195, the section talks about sum chargeable to tax. But I am not, either I can reach out to the assessing officer, find out the sum chargeable to tax and then deduct on the sum chargeable to tax or on the whole consideration. If I am going to deduct on the whole consideration, there is no process, I can directly deduct. If I want to, if the assessee or the deductor feels the sum chargeable to tax is lesser than the total consideration, then he shall reach out to the assessing officer and get a certificate.
What is the time frame?
The time frame for getting the assessment process, I may have to check on it. I'll give you the time frame. So this is being discussed in the next slide. As per 195 subsection 2, if the payer considers that the whole amount of such sum would not be income chargeable in case of the recipient, he may make an application to the assessing officer to determine the sum chargeable to tax and deduct tax on only that sum. This is subsection 2, wherein the deductor will approach the assessing officer and he will say, this is the total consideration that I am paying. But I do not know. I personally feel that this is not the whole component of consideration is not an income component in the hands of the recipient. So can the assessing officer make an assessment and give me the sum chargeable to tax so that I can deduct only on that amount. Subsection 3 is on a different stand, wherein the person who receives the amount, he will reach out to the assessing officer. The person entitled to receive any interest or any other sum on which tax has been deducted under section 195(1), he may make an application to the assessing officer asking for a grant of certificate, wherein he will give he will make the assessments on the facts and facts of the case, and he will give a certificate wherein lower deduction shall be given.
Sir, is it possible to get the amount paid on purchase of property if the transaction is dropped off?
I don't get it, madam.
Oh, is it possible to get the amount of TDS already paid
Okay.
as a refund
Okay.
if the transaction of purchase of property is dropped off? Like the transaction has not gone through. Like the person has not bought the property, but he has paid and generated TDS certificate on the seller.
So you are saying that I have deducted the amount,
Yeah,
but he has not finally paid.
No, he has paid, he has generated the form 16B, but at last the transaction has not gone through.
Okay, the transaction essentially did not go through, but the payment has been made. This is a specific case wherein refund can be applied with the assessing officer. The specific form I can check and I can get back to you. There is a yeah.
No, but the TDS must have been deducted based on the advance amount only received, correct? Not on the overall transaction.
No, but the whole amount, when there is a, so in case of transactions of this sort, what will happen is I am going to make a payment to a non-resident. Okay.
Regular property case I am saying. Regular property case as she was
Okay.
referring, the final transaction didn't was a failure. But
Okay.
the TDS which was deducted and paid was only for the advance amount received, correct?
No, but she is asking wherein the whole amount has been deducted and paid. I am going to make the payment to the non-resident. There should be, yes sir.
But generally, when the full consideration is done, it is
Only after
immediately
that the TDS
registered.
will happen.
Correct.
Because otherwise there is no hold on the
Yes.
seller.
Okay, you are saying that the full consideration will be paid in the first.
No,
No,
if,
no.
if full consideration is paid, it is deemed to have been registered. Otherwise,
Correct.
nobody will keep quiet with that.
Correct. No, but
No, no.
I don't
Yes.
know. I am not
Yes,
able
I
to
think what
visualize
will
that
happen is
situation.
full consideration minus the TDS, the transaction will happen, and after that the TDS will be done and the certificate will be given.
no, but she is saying the transaction did not go through.
No, no,
Yeah,
transaction, that's not.
sometimes in register officer they are insisting on the taxation and for registration of higher for certain values more
Okay.
than some value like 5 crores and above, like they are asking for insisting for the TDS.
They are not registered. Okay.
In those cases where the tax has been deducted and paid, but the transaction did not go through subsequently, where I have not made the transfer at all.
Yes.
That is the scenario she is talking. Now then, so this is one case wherein the first case where short deduction or no deduction comes into play. Next is with regard to 15G and 15H. If a declaration in the prescribed form is submitted under section 197A by the recipient to the payer along with his PAN, then no tax is deductible by the payer in certain cases. What are the certain cases? They are enumerated there: 192A, 193, 194, 194A. 192A is PF, 193, 194 securities, interest on securities, interest on other than securities. 194A is in interest on other than securities. 194 is dividend. 194I is rent. 194D is commission. 194DA and 194E. The National Savings Scheme and the LIC payments. So in these cases, if the person is a senior citizen, resident senior citizen, he shall give a form 15H. If he is any other person, he shall give 15G. The point to be noted here is, there are 2 points to be noted here. One, this condition or this provision will apply at all in the first place, wherein 15G or 15H can be accepted by the payer only when the total aggregate payment that needs to be made by the payer is less than the maximum amount not chargeable to tax. So this is one point that you'll have to see. The aggregate, yes sir.
This 15GH are self-declaration.
Correct.
So that's good enough?
Yes, self-declaration is good enough. Yes.
What happens, because normally the 50G and 15H are submitted at the beginning of the financial year. If for some reason during the year the income goes up beyond the amount chargeable to tax,
Correct.
the assessee obligated to tell the bank or the other institution?
That is right. It is the assessee is obligated to tell, because at that point in time, if once 15G and 15H has been received, they are going to make the they are going to send this 15G 15H to DGAT systems. So therefore there is no onus on the deductor to deduct any tax. But once this the conditions are not fulfilled, then they are supposed to deduct TDS if it comes to their notice. So the point here is the aggregate amount paid by the deductor if it is less than the maximum amount not chargeable to tax. This is the point here. But in contrast, if you see the declaration that is being, I think the font size is very small, but still I can read it out for you. The declaration, this is the declaration that is coming at the end of 15G or 15H. Here it states in the middle, I or we further declare that the tax on my or our estimated total income, including income referred to in column 16 and column 18, computed in accordance with the provisions of the Act for the previous year, will be nil. The wordings used in the declaration and the condition mentioned are two different things. There, the aggregate amount payable is lesser than the amount, maximum amount not chargeable to tax. Here they are saying, they are not talking about maximum amount not chargeable to tax or the total amount. They are talking about the tax being nil. This can be by virtue of 80C. This can be by virtue of 87-year rebate. There can be multiple factors for this. So this small difference should be understood here. So this is the 15G 15H is the second case where we have lower deduction or no deduction. Section 197. ABC Limited I think most of the other slides will go into facts and case point of view so that interaction can be more. ABC Limited had taken on rent a machine for rupees 1 lakh per month. Due to unavailability of any contract, they had rented it to XYZ Limited for rupees 1 lakh to cover the rental expenses and to retain the machine. XYZ Limited had deducted TDS at 10% and paid only 90,000. ABC Limited is now facing a working capital crunch due to this. Is there a solution?
Because renting of machinery is not 10%.
Renting of machinery is?
Not less than, it's not 10%.
Okay, you can take any percentage, but I think it's 194. Yes, it's 2%.
2%.
It was supposed to be building, then I changed it to machinery. So this can be taken as 2%. The percentage will not differ.
File form 13, get the no relation certificate.
Yes. So the option available to the person here is, here he is into trouble because he is paying every month 1 lakh rupees, but he is receiving only 90,000 rupees. So there is a small the working capital, there is a hit. So what he can do is, the assessee can make an application with the assessing officer for lower or no deduction of TDS on payment received by him. The AO, if he is satisfied of the estimated income of the assessee justifies such issue of lower or no deduction, then he shall issue the certificate. The point to be noted here is, there are two things. One, either the assessing officer can issue a lower deduction certificate or he can issue a no deduction certificate. The difference between the two is, in the case of no deduction certificate, wherein no TDS needs to be deducted, if the facts justify the case, then it will be issued to the person responsible to deduct tax.
Specific transaction.
Yes, it will be addressed to the person responsible to deduct tax, and it will be directly to him. In case of lower deduction certificate, it will be given to the person who has applied for the certificate, which can be used for multiple, he can issue it to anyone who is deducting TDS. So next is TDS payment challan practical issues. So there are 7 items in the challan that needs to be filed with the challan that needs to be filed and payment needs to be made for TDS. The 7 items are enumerated. If there is an error in any of the items, what are the items that can be changed or altered? There are 2 parties who can make alteration for a challan that is being paid. One, banker, the other is the assessing officer. What are the powers of the banker? There are 2 modes of payment of challan. One is the physical mode, the other is the online mode. The banker has powers only to change physical challans presented for payment. Online payment, the banker does not have power at all. Also, in the conditions and list that is being provided by the income tax department to the banks, it has been mentioned that there are multiple conditions. A few conditions I can I can give it out. The name cannot be changed ever. Even in the case of banker, even if it is the assessing officer, the name cannot be touched. When you are writing the name in the challan, it should be as per your PAN or TAN. Any change would invite trouble. Because in case of TAN or PAN, if there is a change, if the PAN or TAN has been written differently, for changing that PAN or TAN, the name should be correct. Only if the name is correct as per PAN or TAN, the attachment if you give, then he will be able to change the TAN or PAN. Else the request will be rejected. The same way, assessment year and minor head cannot at the same time be changed. So multiple other conditions are there. The time limits are also specified. For TAN or PAN, assessment years and tax amount 7 days. For major head, minor head and nature of payment 3 months. In the case of assessing officer, he can change both manual physical challan and the online challan. Here, even in this particular case, the name cannot be changed by the assessing officer. So now the banker and the assessing officer are difficult. It is difficult for you to reach out to the banker or the assessing officer. Now there is everything else is correct. Assessment year is right, major head, minor head, total amount, everything is right. I have inadvertently deposited the amount in section 192 instead of 194C. I don't want to approach the banker, I don't want to approach the assessing officer. Because you know how when you do something wrong, you approach the banker or assessing officer, what happens? So is there any other remedy without approaching the banker or assessing officer?
There are further transactions you can adjust in the next quarter.
Further transactions we can adjust in the next quarter. In the same section.
Yeah.
Section is irrelevant. So, section, I am not advocating that you can wrongly quote the section, but if section is wrongly quoted, section is not getting matched with the return that is getting filed. So, if in case the return has been, in the payment challan, the section has been wrongly quoted, you can interchangeably use it and utilize the challan. Only thing you will have to be careful about is, one challan, the total amount, it can be utilized for so much amount of TDS return only. It cannot be used n number of times. Same way, assessment year also. In assessment year, if there is an error or if there is an excess payment that is being made in the current year, if in Q2 I have made a excess payment, I can utilize the same for payment of Q3 and Q4. As sir said, I can make the payment for Q3 and Q4 using the excess amount. For the next year also, Q1 to Q4, I can make the payment using that challan. In the previous year, if there is a demand that is getting right, I can adjust this. So the same way, TDS return filing, if there is some error, tracers have, the income tax department has come up with a form. It's called a correction file. From 1/1/2015, they give 7 days from the date of processing. We know the date of filing. Usually, it takes 2 days for the, after filing, 2 days it will get processed. After that, within 7 days, you can make a correction. When the processing happens, if there are any errors, they will get notified. once you see the notification, if you make a correction, specific notice shall not be issued, and you can, without the notice, you can make the correction. So now, next is the applicability issue that we are going to talk about. When is TDS applicable? When am I supposed to deduct TDS? Any answers? What is my constitution to deduct TDS? Should I be a company? Should I be a partnership? Or is it not applicable to any specific person? Is there any clarity on this matter?
Individually, you are not done to tax audit, no need to require direct TDS.
Individual, if you are not subjected to tax audit, you are not required to deduct TDS. Tax audit present year or previous year?
Previous.
Okay. So this is the broad terminology that we use. In the previous year, if I am not subjected to tax audit, individuals and HUF, in specific cases, not all cases, in specific cases, I have an exemption of not deducting TDS and not enter into the hardship of deducting paying TDS. So, this needs to be clarified. I'll just put this section through. An individual or HUF whose total sales or gross receipts or total turnover from the business or profession carried on by him exceed the monetary limit specified under Class A and Class B of 44AB during the financial year, immediately preceding the financial year in which the sum is credited or paid, shall be liable to deduct income tax under the following sections: 94A, 94C, 194H, 194I, 194J. These are the only sections that are covered by this particular rule. Now, let's understand the intricacy through a case study. Mr. A is a proprietor of a business, paid professional fee of rupees 40,000 in the current financial year. He was subjected to tax audit under section 44AB in the preceding financial year since he has declared lesser profits under section 44A. Whether he is supposed to deduct TDS in the current year. So Mr. A is an individual. He was subjected to tax audit in the previous year. He has made amount of 40,000, professional fees 194J, above 30,000. So as per the section 194J, the limit it has crossed, 30,000 limit it has crossed. Whether he should deduct TDS or not.
He should deduct.
He should deduct TDS. Any other opinion?
He is forced to file 44AB because of that. So he need now.
Once again, sir.
The thing is, as you say, 44AD, 44ADA, he is no longer go, he has to file
Go
the
for 44AB. Correct.
So he is forced.
He is forced, but should he deduct or not?
I don't think so.
So on a general understanding, you are saying it is not possible. But you should also take into consideration that under 44AD and 44AD, if your total amount is as per those sections, even after the amount is small, if it doesn't cross the maximum amount not chargeable to tax, you need not go for tax audit. So it's not very small.
So actually, that TDS reduction talks only on the turnover. No? When the turnover exceeds the tax audit limit, then you have to do TDS. It's not about the 44A.
So that is the point here. I'll go to the previous slide here. The section talks about gross receipts, total sales or turnover exceed the monetary limit specified under Class A and Class B of 44AB only. 44AD, if the 8% scheme, under 8% scheme, if you are declaring lesser, 8% or 6%, if you are declaring 5%, you will be covered under 44AB Class E. If under 44ADA, if you are declaring less than 50%, you will be covered under Class D. Same way, hiring, there you will be covered under Class C. So if your total receipts, gross receipts or total sales cross 44AB Class A and Class B, wherein 1 crore and 50 lakhs is mentioned, and because of that particular reason you have conducted tax audit, then you will be, you will have to deduct TDS under the given sections. So basically the concept of last year tax audit, this year TDS deduction is not applicable grossly. It is applicable only when your limits cross the tax audit limits. We can say tax audit limits.
Revenue.
Yes. So that is being elaborated here. So when I in the first slide we talked about credit or payment, whichever is earlier. When is the amount said to be credited to the account? The first case, professional fees of 40,000 paid, professional fee to ABC and Co account 40,000 is TDS deductible. Assume it is a private limited company's books, whether TDS is deductible. 194J, straight case 30, more than 30,000, so deductible. Professional fee account to professional fee payable account. The person has not been identified. It is payable account.
Yes.
It is still paid. It is still deductible. Professional fee to suspense account.
Yes.
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 So in all the three cases, TDS is deductible.
So we do that on provisions also.
Yes, sir?
Like we do for provisions.
Yes, the same
Even
way.
if you credit it to an omnibus account, it's still there.
Correct. So now TDS and GST, as in we'll understand the background of how GST and TDS intertwine from 194I onwards. We can discuss that in the later part. Now we'll discuss the crux of it, then we'll discuss the background of it. So there is an invoice that has been raised for 1 lakh rupees. SGST, CGST charge 9,000, 9,000, 18,000. Total of 1,18,000 is the bill amount. TDS shall be deducted at 10% on what value? 1,18,000 or 1 lakh? Why is it that 1 lakh is the amount on which TDS is deductible? Is there a backing? How are we arriving at
Even
it?
in service tax, there was a circular saying that not to
Service
pay
tax, there was a circular.
Which circular? That is the issue that we are talking about. There is a circular for GST now. That's a different story.
Even for service tax, it was there.
Service tax there was there.
2012 there was a circular.
2012 circular. Okay. So GST on services, you may have to probably see this very clearly. GST on services mentioned separately in the invoice shall be specifically excluded for the calculation of TDS. Luckily, TDS is not applicable for goods. So TDS, GST on goods is not covered here. GST on services is being specifically mentioned in the circular number 23/2017. GST shall mean all the GST acts. TDS shall be deducted at 10% on 1 lakh only. Now a little bit of a background. The first point where indirect taxes and TDS have come into play, whether TDS will be deductible on indirect tax or not, is clarified through circular number 4/2008 issued on 28/4/2008. Here the case under consideration was under section 194I, and service tax on that particular amount was being considered. The circular was issued stating that in 194I, the amount that they are talking about is only rent. So service tax will never become can never be taken up as rent. So therefore, it was very clearly the circular had come out stating that the service tax on rent part should not be taken for deduction of TDS. There were immediately, once this circular came, there were multiple representations made to the CBDT asking for clarification of whether 194C and 194J, the same principle can be applied and service tax shall be excluded out of the deduction of TDS. Immediately CBDT came up with a letter. It stated that 194C and 194J very clearly talks about any sum. 194I in contrast it talks about rent. In 194C and 194J, they talk about any sum. Therefore, even if service tax is charged, it will come under the ambit of TDS. After that, in 2013, Rajasthan Urban Infrastructure, in that case, Rajasthan High Court ruled that service tax cannot be part of, it cannot be taken into account when calculation of TDS, in the calculation of TDS. So to give effect to this particular ruling, circular number 1/2014 was issued, which stated that service tax in any case shall not be taken into consideration for calculation of TDS. This was again reiterated through the circular number 23/2017 in the case of GST, wherein they said service tax can be equated to GST on services, and you can apply the same rule here also. So let's start looking into the issues now. 194C issues. Contract of sale versus contract of work. A had entered into a contract with B, wherein B shall supply notepads with A's name printed on it. They have entered into a contract wherein A has asked B to print notepads with probably the logo, seal, all those emblems have been given to the contractor, where he will print it and he will send it back to him. Whether TDS is deductible in this case?
Applicable. So contract, specific contract, to put his name.
Correct. Why is TDS applicable?
Because we are putting our own brand name and getting it is only for us, and it is going to be a contract.
Correct. I have sent the email, this particular logo needs to come. They have sent it to me. I have a contract with them, so contract is applicable. Before 2008, this may be taken into consideration. After 2009 Finance Act, there is an insertion in the explanation part of the 194C section. In the explanation, clause 4, subclause E, work shall include, among multiple other things, does not include manufacturing or supplying a product according to the requirement or specification of a customer by using materials purchased from a person other than the such customer. So it says, if you are sending me some goods, I use your material to work on the same and I send it back to you, TDS is applicable. If I purchase material on my own, you give me the specification of how this needs to be made. I make it out of products purchased from the outside market. Then it is not a contract of work, but it is a contract of sale. You ask for the specification, I made it according to the specification and I have sent it to you, it becomes a contract of sale. 194C tries to cover only contract of works, not contract of sale. In the definition itself, it says work, so which essentially means sale is not covered. Therefore, A shall not deduct TDS on the payments made to B in pursuant of this contract. In this similar note, A had entered into a contract with B, a fabricating agency. A shall provide B with chassis. Chassis is the main body of the bus. B shall deliver a bus to A. I will send you the chassis. You fabricate everything. You put every other component in it. Make a bus. Send it back to me. Whether this will become a contract of sale or a contract of work. I have sent the chassis. Remember.
It's a contract of work. It's like job work which I'm sending some goods to you and you are fixing it on it and sending it back to you.
Correct.
There has to be material also involved. It's a total contract of both material and labor.
Yes, material and labor are involved in it.
Yes.
Okay. So you are saying it is contract of work or contract of work, because it has material and labor, so it is contract of work.
Indivisible contract.
Indivisible contract. So this particular case is dealt by Andhra Pradesh High Court in AP State Road Transport Corporation, Andhra Pradesh and Telangana High Court. In determination of whether a contract is a contract of sale or a contract of work, multiple parameters play its role. In the given case, the interpretation of the apex court in PS Company versus State of Andhra Pradesh shall apply. It states, the bulk of the material used in the construction belongs to the manufacturer. In this particular case, he has given only the chassis. The windows, the seats, the engines, the lights, every other, the whole sheet that covers the bus, every other aspect has been purchased by the fabricator from the outside market, who sells the end product for a price that will be a strong pointer to the conclusion that the contract is in substance one of that of sale of goods and not one of works and labor. This was delivered in relation to the VAT, but it has come into play into income tax for the same
Logic is same.
logic is same.
Excuse me.
Yes, sir.
But if you take the pricing, the chassis will be substantially more costlier than the fabrication. Are you going to take a value or are you taking number of components?
That particularly I have read through the whole case. They have not mentioned whether they are looking into the value. Apart from this, they have taken multiple pointers. The main pointer that they are talking about is the pointer here. Apart from this, they have taken multiple pointers also. So they have not taken value as such. I haven't seen the line wherein it states the chassis amount is so much, the other amounts are so much.
If the value were to be considered, it could reverse the whole.
No, value is not the consideration for this decision.
So even in PS and company case, bulk of the material is mentioned. Bulk of the value of material is not mentioned. So it is open for argument either through this case or that case also. So we can arrive at a conclusion on a totality.
Cabin body requires a lot of material.
Correct. And engine is the most important part is what I feel. Engine of the bus and the other parts are very more important than the chassis is what I feel. I do not know. I am not from the industry.
The engine is part of the chassis.
Chassis will come.
Oh, chassis. Oh, yeah. The chassis, it will become part of it.
Yeah. The chassis is the moving part. It's just
the outer and the seating. We may probably have to wait for another case law which comes up with the whether it is the value or the.
Okay.
So let's move on to the next case in 194C. Below are the invoices raised by XYZ gas agency. There were two invoices that are raised. One, there is a sale of gas to ABC Private Limited, where including transportation cost, the total amount is 1,20,000. For DEF Private Limited, XYZ gas agency has sent a bill where sale of gas is mentioned as 1 lakh rupees, transportation charges has been mentioned as 20,000 rupees, totally 1,20,000. Whether TDS is applicable to payments made by ABC Private Limited, whether TDS is applicable to payments made to DEF Private Limited.
TDS is applicable only to DEF.
Transportation.
Because
Why ABC? First, let's address ABC.
Okay. ABC, they are purchasing the gas only.
Correct.
He delivers it at the doors.
Correct.
There is no consideration for the transport separately.
Correct. But okay. So you are saying that it is essentially ABC Private Limited, whatever service or contract that has been entered is essentially that of a
Purchase of a gas.
sale, contract of sale.
Contract of sale.
Correct.
They are not split.
They have not split. In the second case, it states that there has been a split that has been given. But the contract is the same. Whatever contract they entered with the ABC Private Limited, same contract they have entered with DEF Private Limited also. By billing till the first bill, ABC Private Limited's bill, the billing system was different. The billing system got changed when DEF Private Limited, they were giving another bill to DEF Private Limited, the system got changed.
So even otherwise, if you buy some steel and transportation is charged against onto it,
Okay.
instead of gas, you put a steel.
Yeah.
Okay, steel against it is going to be a purchase of product, purchase of material.
Correct.
Commodity. There is no work contract involved in it.
Correct.
There is no subjective of 180% available here.
Correct. So you are saying in DEF case it is not coming, or in ABC case it is not
In
coming?
both cases, it will not come.
Both cases it will not come. So this is what is being decided by the this is what comes out from circular number 9/2012. It is clarified that in the case of seller of gas sells as well transports the gas to the purchaser till the point of delivery. This needs to be noted very clearly. He can transport till the point of delivery. I can transport at the point of delivery. I should start my transport, hand it over, and it should come back. If I say probably I transport it to one godown, and then probably another contract is entered wherein he wants it to be transferred into another place, and a separate bill has been raised, that's a different issue. That I will deal a little later. But here, once the delivery happens, wherever delivery happens, transportation stops, as per the agreement or the contract. So there, ownership is simultaneously transferred. The manner of raising of the sale bill, whether inclusive or being given separately, does not make any difference. The contract that has been entered is essentially a contract of sale. Therefore, ABC Private Limited and DEF Private Limited shall deduct TDS on the payments to XYZ gas agency. It is also clarified that transportation charges paid by the seller or the buyer to another person, to a third party, that will be very well be covered under 194C. There are, where it will not be covered is something that I will handle next in the next one. So here it will be covered, the provision shall apply and TDS shall be deductible. TDS on plying, hiring or leasing goods carriage. So this is directly the conditions that are given. The credit or payment should be to a contractor during the course of business of plying, hiring or leasing goods carriage. The contractor shouldn't have owned more than 10 goods carriage at any time during the previous year. The point to be noted is he shouldn't have owned more than 10 carriages at any time during the previous year. April month, the contractor had 6 carriages. In the month of May, he has purchased 5 carriages. In June, he has sold 2 carriages. Net in June, he is having 9 carriages. Whether this section will be applicable to such person. So very clearly, at any time during the previous year, he shouldn't have owned. So the straight jacket, that is done. The contractor shall furnish, that particular contractor shall furnish a declaration stating that the above mentioned fact to the person responsible to make payment. PAN shall also be attached with it. TDS shall not be, if all these cases are satisfied, then TDS shall not be deducted under section 194C on the payments made to the contractor for the current financial year. One doubt now is, when he says at any time during the previous year, in the, say example in this year, today we are standing at October 2018, is he talking about 17-18 or is he talking about 18th April to till date? Yes ma'am. Correct. So in the previous year, here is the previous year as per the act wherein it stands for all the sections. It is from April 2018 to till date. One example that I would like to give is, in April 2018, if I had received a declaration stating he had only 6 carriages. In June 2018, he has said that he has increased his capacity by 5 more carriages. Totally 11 carriages has come. Now in June 2018, should I deduct TDS or not? I should deduct TDS. Now again, if he comes back to me again this month, even if he reduces, I am not going to stop deducting TDS. What will happen to the TDS that got deducted in April 2018? Should I make good of it now? Same person, April 2018, he said he had only 6 carriages. June, he had increased the capacity by 5 carriages, so totally 11 carriages it has become. Now he has again reduced 3 carriages, so now I will not stop applying the provisions of TDS, so I will deduct TDS.
This retrospective effect from the beginning of the year.
That is not the case. So once declaration has been given, no TDS has been deducted, it will stay there. The second point, whenever I am going to again make a payment, at that particular point I will make a assessment and I will proceed with it. No retrospective amendment for the particular case. So this previous year it is got clarified in circular 19/2015. Moving on to 194J cases, issues. There are 3 directors in a company, Mr. A, Mr. B, Mr. C. Mr. A is the managing director. He has received salary through a contract of employment for rupees 12 lakhs. Mr. B is the director of the company, was paid 50,000 as commission. Mr. C is the director of the company, was paid 25,000 as sitting fee. So first question is whether TDS is applicable to Mr. A under section 194J.
Applicable only 192, sir.
Correct. So TDS is applicable under section 192 even to a director if there is a contract of employment between the company and the director. What happens to Mr. B? He has been paid commission. Which section?
H.
194H.
There is no professional services involved.
There is no professional services involved. But if you go through the 194J, the lines, the wordings, it says by whatever name called, if any payment is made to a director, TDS shall be deducted under section 194J only. Clause BA. Clause BA says any name you can give, but once you have made payment to a director, it comes under it comes under 194J. What happens to Mr. C? Mr. C has received sitting fee. He has received only 25,000 rupees. So 194J, can anybody give me the monetary limit? 30,000. He has received only 25,000 rupees. Is this particular amount chargeable to tax or not? It is called sitting fee. Yes, sir.
For sitting fees, there is no threshold.
Below the limit.
For sitting fee, there is no threshold limit. Huh? You are right, but to the extent of sitting fee, I reserve the comment. Sir?
Sitting fees only for 4 meeting.
Yes.
So 4 quarter will applicable.
Okay. No. Let us assume 25,000 is the total aggregate amount.
Not applicable.
Not applicable.
194J, it will come within the 30,000 limit.
Correct. 194J usually comes under the 30,000 limit. When you read the clause, there are 5 clauses 194J talks about. A, B, C, D, and there is a clause which was inserted between B and C, BA. This is clause BA, payment to directors. The point that we'll have to concentrate here is, in the proviso that is being given, 30,000 monetary limit for every particular item of A, B, C and D separately are defined to be 30,000 rupees. But for BA, it has not been defined. So from 1 rupee, payment to directors will become chargeable to TDS.
Even for rent, sir, rent paid by the company to the director.
Rent paid by the?
Company to the director of the premises.
By the plain reading of section 194J, that is the case. Even if rent is paid by the company to the director, it comes under 194J. I will read through 194J, that particular section, clause BA. Any remuneration or fees or commission by whatever name called other than those on which tax is deductible under section 192 to a director of a company. Here they have not mentioned any sum chargeable to tax. That is one point to be noted. But any remuneration, fees or commission by whatever name called, they have specifically excluded other than those on which tax is deductible under section 192. This is a very good point to be contested probably with the assessing officer, because rent cannot fall under remuneration, fees or commission. But nevertheless, they have excluded only one part. They have included everything else by calling by whatever name called. But they have excluded only one part specifically, other than those on which tax is deductible under section 192. That particular section they have removed it out. So probably if that particular case comes wherein rent has been paid, or a different sum has been paid and it has not crossed the limit in that particular section. If rent say is paid only 20,000 rupees, it has not crossed the limit there, then probably case law will come out, CBDT will come out with a circular instruction, or the case law will give us throw us some light on it.
So you are talking about rent paid to a director who is not an employee.
Correct.
Yeah, that's the case you are talking about.
Either
If he's an employee, automatically that 192 will.
No, 192 deals only with salaries.
Yeah, I know. So that's what I'm saying. If he's an employee, automatically that will get taken care of.
Yeah, 192 will take care of it.
So this you are talking about a rent paid to a director who is not an employee. Who may be a independent director or who.
Yes, correct. You are saying that if the removal of 192 is not to define the director.
I know.
The removal is the income of 190 under section 192.
Yeah, rent level not even.
Okay. So another case in 194J. So we have seen usually when chartered accountants they give out a bill to the client, we will have a component of reimbursement of expenses. Mr. Z, a chartered accountant, had rendered auditing services to Mr. A and the invoice is produced to the client. Audit fees is 1 lakh rupees. Reimbursement of travel expenses is 20,000 rupees. Total is 1,20,000 rupees. TDS is deductible on 1,20,000 or 1 lakh. Sir?
120.
120.
The expenses should be separately billed, not to tax.
Right. Any other view? So 1,20,000 will be totally charged. Why?
Any sum.
Yes. The operating word in 194J that actually brings reimbursement also under the ambit of this section. GST also because of this only, service tax also because of this only it was under the ambit of TDS. Then notification claim, they specifically excluded it. There is no such notification for reimbursement of expenses. So reimbursement will come under the ambit of TDS and TDS will be deducted on 1,20,000 rupees. As sir said, reimbursement shall be separately billed and the bill can be separately raised, and for that particular thing there is no need for deduction of TDS. There is a case law also, Dr. Wilmer Swabe, India Private Limited. Now moving on to the main issue. Sir,
194A.
194A securities.
No, interest payment.
Interest paid other than securities. I have prepared only specific cases. If you have some doubt, probably we can get it clarified.
So if a company takes a loan from to purchase a car from you, take the case Sundaram Finance.
Okay.
They take a loan.
Okay.
And they pay the EMIs.
Okay.
It includes interest also.
Mm.
So post-dated checks are issued. They collect the post-dated checks for 24 installments, 36 installments.
Okay.
Which includes the EMI and the interest portion.
Okay.
So as I am paying interest to Sundaram Finance as a company, I am supposed to deduct TDS. Because it talks about banking company, it doesn't talk about this NBFC.
Correct.
In 194A.
Correct.
But I pay fixed checks.
This is a very specific case. Probably I can once I complete this section, probably I'll get down and I'll probably clarify.
Practically, in this case, what we do is we deduct the TDS and we give the certificates. They reimburse it. Sundaram Finance or Bajaj, Goa, Cholamandalam. You pay the 3 months TDS, give the challan, they will issue the check back to you.
Okay.
Oh.
So this 195, sir.
Yes.
That if the person outside, like non-resident, is not having a ban in India, then they are not subject to 20%. But it seems there's another provision.
You are saying the person who is resident, non-resident, he is not required to have PAN number, correct?
Yeah, so as per 206A, 20% of TDS is deducted now for any payment, particularly royalty payment to non-resident not having a permanent establishment in India, as well as he is not having a.
Correct.
So as per 206A, we have to deduct 20% of the amount.
Correct.
But clients are going on arguing that there is one more provision which has come. In respect
There has been a circular. I don't think there is any provision that has come.
Do you have any light on it?
I don't think I have a slide specifically on that. Probably I think I have a material here. I can probably find. I can give you the numbers from this. So now let's discuss on one key issue that we will be facing when we are in the middle of tax audit season. Disallowances. When is an amount disallowed in regard to TDS? When there is short deduction or there is no deduction, when TDS has been applicable and should have actually been deducted. So let's discuss it through in a case study. ABC Limited paid rupees 1 crore professional fee to Mr. A, who is a resident. 40A, 1A talks only about resident. So I have taken a resident case. It had failed to deduct TDS on the said transaction. What are the consequences that would arise?
30% of the 1 crore will be disallowed.
Correct. Under 40A, 1A. What else? TDS non-deduction. What are the other repercussions that the client may face, assessee may face?
See, who is a recipient who has shown this money income in this.
No, consequences. We'll go into the consequences first, then we'll come into the next step.
Consequence, TDS prosecution proceedings can happen.
TDS prosecution proceedings can happen. Okay. What are the TDS prosecution proceedings? One, there will be prosecution if we go directly imprisonment 276B. Apart from the, yes.
Go for compounding and closure.
Compounding and closure. Apart from that, the interest is there. 201 1A interest is there. Then you have 221 penalty is there. 201 you will be declared as an assessee in default. Only when you get declared as an assessee in default, then the other sections of 221 penalty, imprisonment, everything will follow suit. If that is not done, nothing will follow suit. So these are the consequences of non-deduction of TDS. 30% disallowance, interest, assessee will be made an assessee in default. Interest is irrespective of whether you are an assessee in default or not. That is the compensation for the government for non-deduction or the delayed deduction, short deduction, whatever the case may be. One important thing that you will have to see here is, once you have not made any deduction in the previous year, first quarter I have not deducted. Now just for making claim of the amount, if I want to deduct that amount and I will make the payment, there is a delay in filing of the TDS return also. Q1 of the previous year to Q2 or Q3 of the current year. So there is a huge, almost 1.5 years gap that has seeped in between. 234E, there is a additional fee that you need to pay, 200 rupees per day, which may extend up to the TDS amount. So this is one big thing that we are looking at. Is there any way to alleviate the solution? You were saying something, sir. Yes. The earlier you were starting on something. I think that is the point that I am trying to divert.
That was to avail the benefit of the disallowances.
Correct.
Remove the disallowances. If
Correct.
I prove that opposite party has shown his return of income that 1 crore and he has paid the tax and there is
Correct.
no revenue loss to the government, if I prove it, then the disallowances I can get out of it.
Okay. So I will just
Getting a certificate.
polish the point here. The first proviso to 2011. 2011 is the section which allocates who is the person or the assessee in default. The figuring out provision is 2011. There is a proviso, first proviso to 2011, which states, if a person, as sir said, if a person for whom I have not deducted TDS had filed his return of income under section 139 and he has included the amount that I have paid to him in that particular return of income. For after including that amount, he has arrived at the income, total income on which tax has been calculated, and he has paid the entire amount either through TDS, TCS or whatever means. He has made the payment in full, in totality to the government. Then the government is not at loss. He shall receive, get a certificate from a chartered accountant in form 26A. If he produces that certificate to me, where I am the deductor, and if I am able to upload this form in the TDS, eTDS website, then I will not be called as an assessee in default. Mr. A should have filed the income, his return of income under section 139. This whole amount of 1 crore should be added, for which the tax should have been paid. No short payment and all. Earlier it was there, now it is not there. And furnishes a certificate to this effect from chartered accountant in form 26A, where the chartered accountant signs all these particular conditions. Whether it is satisfied, he will sign it off. He will say that whether the return has been filed, the amount has been taken into consideration, tax has been paid, everything will be taken into account. This 26A will be filed with the DJIT systems. Then ABC will cease to be an assessee in default. One particular leeway or the benefit of this particular way of doing things is being elaborated. You will be getting you will not be debarred or disallowed on the expenses. 30% disallowance will not happen. There are multiple benefits to it.
So the section is 139 or 139?
That is an excellent question. It's 139. So that how 139 using the word, using the section 139 in totality in comparison with 139.1, we will be elaborated over the next slide.
The 26A form, time limits once the department finds and sends a notice, or I file voluntary 26A.
26A is not a form with the income tax department. 26A is a form with the chartered accountant.
Chartered to be uploaded in DJIT.
Oh, when it needs to be uploaded. Whenever I want, I can upload it to the DJIT. The sooner I upload it, I will cease to be an assessee in default. So the benefits of doing it is, second proviso of 40A 1A will be applicable, where it states that it shall be deemed that the assessee has deducted and paid the tax on such sum on the date of furnishing of return of income by the resident payee referred to in the proviso, in the said proviso. Okay, it's here. In the said proviso. There is therefore no disallowance. Here the point that needs to be noted here is, the date of furnishing return of income by the resident payee. I'll explain why that is very important in the next slide. Or it can be here also, in the next coming sections you will be able to have an idea of why that is important. Once you are not an assessee in default, section 221 penalty will not be applicable. 234E, since this has been uploaded, you are not an assessee in default, I need not deduct TDS in the current year. If I need not deduct TDS in the current year, if I am making any payment to the customer or the supplier, there is no need for me to file returns at all. If there is no need for me to file returns at all, 234E will not arise at all. So the big amount that stands here, 200 per day, is being removed through this, ceasing to being an assessee in default. The last point is first proviso to 201(1)(a). Apart from assessee in default issues, there is a proviso in 201(1)(a) which states the period for which interest shall be paid ceases on the date Mr. A furnishes his return. This is in regard to first proviso to 201(1)(a), where it states the date of the period starts from the date on which you are supposed to deduct to the date on which the assessee has filed his return of income, wherein here the assessee is the payee, where he has filed his return of income. But still the interest between this date shall be payable at 1% if it is not deducted. If it is deducted and not paid, it is 1.5%. Alternate scenario. If Mr. A had not filed returns before the time limit for ABC Limited to file its return, before that we will also discuss if Mr. A has not filed his return before 139, one time limit, will it make any difference? No. Because 139 as a section in totality has been given, belated return will be covered under the ambit of this section. Here what I am trying to convey is, he has filed belated return, he has not filed within the time limit of the assessee, who is ABC Limited. What are the consequences? So other consequences apart, in the tax audit report, disallowance shall be made because he has not filed his return, 26A cannot be produced, so disallowance will be given at 30%. But that being said, the first proviso to 201(1) refers whole of 139, so that shall not come. Therefore, even belated return filed by Mr. A shall be considered. Once Mr. A files, after the tax audit and all is over, he files his return in January. You have time limit till 31st of March to file your returns, so he files in January. On the date he files his return, he gets a certificate in 26A, form 26A. At that point in time, you upload it in DG80 systems. With the DG80 systems, you will cease to be an assessee in default. 221 penalty will be stopped. Any proceedings will be stopped. 201(1)(a) interest, the period will stop at that point in time. Now the point is, the disallowance that was made in the previous year, can it be taken in the next year? Disallowance of 30% that was made in the previous year, I have not made any TDS payment, whether can it be taken in the next year? So it can be allowed in the, I have given it here. The disallowed 30% amount of 1 crore shall be taken in the second year, in the next year, owing to two provisos. One we have already explained, the date of, it shall be deemed, the date of filing of return by the payee shall be deemed to be the date of payment and filing by the assessee of TDS. So the return filed by the payee shall be deemed to be the date of payment of TDS by the assessee. So that is one proviso. The other proviso states that if in case, if the TDS has been deducted and paid in the next year, then the disallowance that was made in respect of the previous year shall be allowed in the next year. Point to be noted is, similar provisions are not available in case of deductee if the deductee is a non-resident. If he is a non-resident, these provisions will not apply. He shall remain to be an assessee in default to that extent. But there is another case there which will follow soon. 40A1A. ABC is a charitable trust. Before entering into this, is a trust required to deduct TDS?
Yes.
Yes. If a trust does not deduct TDS, what are the consequences?
You lose that exemption.
Just because TDS is not deducted, the exemption will be removed.
Sorry.
No, you're talking about, okay, so I understand to an extent what you're doing. Okay, right.
Earlier there was no disallowances.
Sir?
Earlier there was no disallowances.
Correct.
But now amendment allows disallowances.
Disallowance to be made. There is an amendment which will allow disallowance to be made. We'll say it through a case study. ABC Limited. ABC is a charitable trust registered under Section 12A that derived income from property held under trust of rupees 1 crore rupees. The trust had accumulated a sum of rupees 14 lakhs for the future. The trust had used rupees 83 lakhs towards purchase of food and consumable materials for the beneficiary of the trust. So let us assume on this amount TDS is not deductible. The trust had paid a professional fee of rupees 3 lakhs to Z. So now the total 1 crore, how it is being applied is being given. 83 lakhs for the purpose of the trust, it has been expended. And 3 lakhs also, it is for the purpose of the trust only. 14 lakhs has been accumulated for the future. So which is the unused amount of the income from property held under trust. Should TDS be deducted under trust? Yes. What is the impact if TDS is not deducted? Now, in this particular case, if I have not deducted TDS, what is the tax amount that I am supposed to pay? Or because owing to the disallowance or owing to the not making the TDS deduction and payment, what is the amount? What is the differential amount that I am supposed to make payment of income tax?
Up to 85% it is allowed.
Correct?
1 lakh, 1 lakh 30%.
Okay, 1 lakh 30% will be calculated, and on that it will be disallowed, which is 30,000 rupees. Okay, that is one way of looking into things. The other point is people used to take a stand as 3 lakhs into 30% is 90,000. 90,000 shall be the income that will be allowed for tax, that will be paid as tax. So now a little bit of an understanding, as you said, 85% needs to be applied. The section, the newly inserted amendment, it talks about not disallowance of expense, it talks about disallowance of application. So the provisions have been taken or inspired from the 40A 1A provisions, but it has been taken from there, it has been brought into the context in the context of application of income. So I'll just display the explanation that is being given. So here, for the purpose of determining the amount of application instead of expense, application under class A and class B, the provisions of subclass IA of 1A of class A of section 40 and subsection 3 and subsection 3A of section 40A shall mutatis mutandis apply as they apply in computing the income chargeable under the PGPP. 3 and 3A of 40A are cash related items. Here this 40A 1A is the case that we are looking into. Non-deduction of tax at source would now attract disallowance in the hands of the charitable trust too. But note that such disallowance would not directly result in taxable income. It would impact the application of income, and only if that application of income is above 15%, then the unspent income and disallowed income in excess of 15% shall be taxed. To explain, in the given case, unutilized amount is 14 lakhs. Disallowance that is sought to be done is 3 lakhs into 30% is 90,000. So, though the whole of 3 lakhs is an application of the income earned from asset in the trust, 90,000 will be disallowed as application. So the total amount comes to be 14 plus 90,000, which is 14,90,000. That will be the amount, the total amount disallowed plus the unspent component put together is 14,90,000. 14,90,000 does not cross 15%. On 1 crore, 14,90,000 is 14.9%. So there is no amount that is chargeable to tax. If in case the amount of unutilized amount, if the unutilized amount is say 15 lakhs, what would be the case? If the unutilized amount is 15 lakhs, then already 15% has been covered. 15% has already been covered. Disallowance of application 3,90,000 is coming. This 90,000 would be fully taxable because this 90,000 exceeds 15%. 15.9% will become 0.9% is 90,000 rupees, which will be taxed. So let's move into the next case. This 40A1, it deals with disallowance in the case of payments made to non-residents. ABC Limited paid rupees 20,000 professional fee to Mr. X, who is a non-resident. It had not deducted any amount on the said transaction. Whether TDS is deductible by ABC Limited on its payment to Mr. X in the first case?
Yes.
Yes. 20%. This is in regard to 195. 194J will not apply, 195 will apply. If TDS is not deducted, what are the consequences? Earlier, whatever consequences was elaborated there, most of the consequences will apply here. Small changes will be there. What are the consequences that we may expect in the case of payment, professional fee payment to non-resident? Disallowance, is there a difference?
The total amount will be disallowed.
Sir?
The total amount will be disallowed.
Yes. In the case of 40A1, 30% shall not be disallowed, 100% shall be disallowed. This is a major hit. 100% of 20,000 shall be disallowed in the current year. Since the figure is 20,000, it seems to be small. If it is in lakhs or crores, it will be a huge hit in the income computation. Interest under section 201 1A shall be payable. The same thing. He will be considered an assessee in default. Penalty under section 221. Fee under section 234E up to rupees 200 per day. Imprisonment under section 276B. Now, the proviso that was mentioned there under section 201 subsection 1, it is not applicable for non-residents. Since it is not applicable, therefore ABC Limited shall remain to be an assessee in default. Is there any other way out of this situation?
GTA.
Sir?
Double taxation agreement between the countries.
Agreements between the countries, say agreement between the countries gives a higher figure. That will anyway be considered. In computation of your income, that will anyway be considered. So, there is an instruction that has come out 2/2014, which states, as sir has already he mentioned this fact, the section 195 talks about sum chargeable to tax, in contrast to any sum or the total amount or the other sections. What they have a different wording, but 195 talks only about sum chargeable to tax. As per instruction 2/2014, if the assessee fails to deduct TDS under section 195, the assessing officer shall determine the appropriate proportion of the sum chargeable to tax as mentioned under section 195 subsection 1 to ascertain the tax liability on which the deductor shall be deemed to be an assessee in default. This proportionate sum shall depend on the facts and circumstances of each case. So, to this extent only, 221 will apply, 234E will apply. 201 1A is anyway applicable. Now if I deduct and pay, then that will cease to exist. So this is being supported, this instruction is being issued in congruence with the rulings that has come out in GE India Technology Private Limited and Transmission Corporation of Andhra Pradesh Limited and another. So these are the cases that I have in hand. So now we can discuss on the other cases that you were asking, sir.
So in case of this particular issue, which are any sum which is chargeable tax in India.
Correct.
Most of the payments which I'm going to give where there is no permanent establishment, other things to do that is taxable in India.
Okay.
Okay, where the place of service happens abroad and there is no nexus of the transaction.
So you're saying the payment alone happened in India and there is no nexus between the service has happened outside India.
Outside India.
Okay.
Okay, in that case the taxable.
There is no sum chargeable to tax in India. Then the amount, the assessee shall be assessee in default to the amount of 0 rupees. I would also like to have I don't have slides on it, but I would like to give you a brief idea on 15CA and 15CB. 15CA and 15CB is required in case payments or remittances are made outside India. 15CA has 4 clauses: Clause A, Clause B, Clause C and Clause D. Clause D is specifically for exempt cases where tax is not, where the amount of remittance is not taxable in India. Clause A is for cases where Clause A, B, C or 3 are for the cases where the amount of remittance shall be chargeable to tax in India. A is if the amount is lesser than 5 lakhs. B if it is taxable, and there has been under section 195.1 and 195.2 and 195.3 I have explained you lower deduction or no deduction certificate. If they have got that and lower deduction has been made, then it will come under the clause B. Clause C shall be the actual, if it is taxable and tax actually had to be deducted and you will have to make payment. So in clause C alone, there is a requirement to get a chartered accountant signature, wherein you should have verified the contract, the invoice that has been raised, and the other conditions that follow through. You will have to verify them, sign it off, and you can you will be attaching the form 15CB along with 15CA and will be submitting to the bank. The bank will process the same. So this is one case that I would like to discuss. The other case I have right out of my mind is there is a example. If a company is issuing securities, if the company is issuing securities, it is issuing to qualified institutional placements or through other means where the person who is purchasing the security is identifiable. That is one case. There are cases where the securities is being issued to a person to the public, say they are issuing it to the public and they do not have control of who is holding the security as on date. Is it okay if TDS is being, the applicability of TDS sections would be for the securities issued to qualified institutional placements in par the same way it is being issued, it is being applied on the securities issued to the public? Do you think it is the same as in whether it should be taken up as in the same qualified institutional placement, whatever placement has been made, the same way public should be treated, or there should be a difference? So there has been a circular which states that if interest, TDS on interest has been is not applicable in particular cases where securities has been issued to the public. This is one. Second thing is there is a case wherein the company has issued a share. The company has issued a interest zero coupon bond or deep discount bond security. It has been issued to Mr. A. Mr. A held it for so much amount of time. Then he sold it to Mr. B. Now, at the end of the maturity period, the company has deducted TDS on the interest. He has deducted TDS on the interest, and on B, the payment that they have made to B. So now the assessing officer says that since the particular person, concerned person B, had not held the complete through the complete period of the security, he will not be allowed for TDS benefit of the whole amount. Is this justifiable? I'll repeat the question. Company has issued security to A. A has sold the securities for a concerned amount, which will be a markup because there has been an interest that has been earned to Mr. B. B has purchased the same. Company has deducted TDS on the payment that it has made to B. So since it has made payment, it has deducted TDS on B payments that has being made to B. The assessing officer says that since the interest is not offered from the first starting date to the end date, TDS shall not be granted in full.
But the same consideration will be fixed based on the interest available. This is the date on which they
Correct. It will be based on that only.
So he has to pay them. Okay. So that is included in his consideration. Why can't I take that TDS?
Correct. So by common sense, it is applicable. Common sense, yes, it should be allowed. But whether it is allowable as per the law, most of law is not common sense. So this has not found its place in the Act. There is a circular that has been issued 2/2002, which states that the entire TDS credit shall be given to the to Mr. B, and there shall not be any partial allowance or disallowance of the TDS credit that is due to him. So this is all I have for the day. Thank you so much. 234E penalty is that is how I discussed in 40A 1A when I discussed. If there is no need for you to actually deduct, pay or file your returns, then automatically 234E has been. You are saying that you don't, the other person has never paid 139, he has never paid, and
even otherwise we
As
file.
directed, I paid, but due to some reason he has filed return late. This consequence of 234A, we were talking about not deducting, and the opposite person has filed it like that.
okay,
Now I'm asking, I have deducted, paid, but not filed the return due to some reason.
deducted and paid, but you have not. In that case, what I would suggest is go for this 139 route or the 40A 1A route directly, wherein 201 you will be made not an assessee in default, where you will avoid 221 to the extent of the total amount of default. Also 101, 201 1A, the day this guy paid his files his return, it will stop. Also 234E is avoided, which will be to the, if the amount is going to be equivalent to the amount of TDS. If the amount is going to be equivalent to the amount of TDS, then we can directly ask that person to make the payment. File is return and you pay the amount, because you are repaying the TDS amount. While actually, if you see, you will be disallowed of 30% in the current year. There will be there will be a shift in the allowability of the expense. That is one part you are dealing with. 234E penalty will be there. Fee will be there. 221 penalty will be there. 201 1A again will be there. So instead of facing these four, you directly take the payment to the assessee, the payee, and you ask him to furnish Form 26A. That will save you a lot of cost. Anything else, sir?
Is there any time limit for revising TDS return?
Revising the TDS return, you can do it n number of times. The 7 days that I was talking about is before issuance of notice. You can revise it any number of times. This is not an issue. That I haven't seen a case wherein the TDS has not allowed a revising of return.
Sometimes some government organization, they call us after 8 years or 9 years, and they are calling us for revision of TDS return.
8 years, 9 years, sir.
Before that, everything is over and the person is also there. The client is also no more, but they are asking. They are going on filing TDS return.
Probably this has come into play from 1/1/2015. Online form revision has been possible. From then on, you can revise any number of times. From that date, you can do. I am not sure about whether 8 years to 9 years before, when you did manual returns, whether we can revise it now. I am not very sure. The Act does not prohibit it. Probably rules may have some clauses in the previous rules.
So in all the cases, if you pay the tax before the filing of returns, you are eligible. That is what you said.
Correct. Before 139 or before our filing the due date. 139 one time. So thank you. Thank you for the opportunity.
Good evening, everyone. Thank you for this wonderful speech on enlightening us on TDS, very tedious part of TDS, along with the sufficient supporting case laws and sections and circulars. Thank you, sir.
Thank you.
Thank you, sir.
Thank you.